Bank of Canada predicts harsh recession. CBC scrambles to calm staff with grief counseling. The Bank of Canada's chilling warning of a harsh recession has sent a powerful ripple of anxiety across the nation, igniting concern from kitchen tables to boardrooms. For many Canadians, the grim forecast isn't just numbers. It's the looming fear of job losses, foreclosures, and shattered financial plans. Adding a bizarre yet poignant twist to the national mood are persistent, though unverified, reports that the CBC offered grief counseling to its employees in response to the economic update. Whether rooted in fact or simply reflective of the nation's collective anxiety, the story encapsulates the deep unease gripping Canadian society. Governor Tiff Macklem's announcement was more than a policy update. It was a siren, warning of two converging storms: a protracted global trade war that threatens to cripple supply chains and suppress export markets, and an imminent Canadian recession, with all the devastating consequences that follow. Economists, analysts, and citizens alike are locked in debate over whether this is the product of external forces or the consequence of years of flawed domestic policy. Either way, the impact is already being felt. Delinquencies on credit cards and auto loans are rising sharply, especially among renters and low-income households. Meanwhile, many homeowners are facing the shock of renewing their mortgages at rates 2 to 3 times higher than when they first signed, adding hundreds or even thousands of dollars to their monthly expenses. The consequences of these mortgage renewals cannot be overstated. Nearly 60% of all Canadian mortgages are set to renew by 2026. Many of these were locked in during the COVID-era period of artificially low interest rates, when government policies flooded the market with cheap credit. Today, those same homeowners are trapped in a financial vice, confronting monthly payments that no longer align with their household budgets. For families already stretched thin by inflation, rising taxes, and wage stagnation, this is not just an inconvenience, it's a looming catastrophe. Critics of the current government argue that these crises reveal fundamental weaknesses in the Canadian economic model. Rather than fostering sustainable growth through innovation, productivity, and diversification, Canada has leaned heavily on debt-fueled consumption, housing speculation, and a bloated public sector. Regressive tax policies and over-reliance on certain sectors have deepened inequality and left the nation ill-prepared for economic shocks. The economy, they argue, is not built on solid bedrock, it's built on borrowed time. Against this bleak backdrop, the rumored grief counseling at the CBC becomes more than just a media curiosity. Whether it was truly tied to the economic forecast or not, it symbolizes the psychological weight of living in a country where the future feels increasingly uncertain. It's a reflection of a broader crisis, not just of economics, but of confidence, identity, and hope. Enter Mark Carney, the newly minted Prime Minister and Liberal leader, who now faces the Herculean task of restoring economic stability and public trust. Once heralded as a steady hand in turbulent financial waters, Carney is now being scrutinized for his role in shaping many of the fiscal policies that critics say contributed to this crisis. His past affiliations with global finance institutions, his championing of carbon pricing and monetary easing, and his technocratic approach to governance have made him a lightning rod in a political climate that is increasingly demanding transparency, accountability, and results. Opposition voices, particularly from the Conservative Party, have seized on this moment. Pierre Poilievre has emerged as a fierce and articulate critic of the Liberal economic record, calling out the explosion of national debt, the erosion of purchasing power, and the punitive tax regime that is squeezing families and businesses alike. He has built a movement around fiscal restraint, personal responsibility, and economic opportunity, tapping into a growing sense of frustration and disillusionment among working and middle-class Canadians. Poilievre argues that the way out of this crisis is not through more government spending or technocratic tinkering, but through bold structural reforms. His platform calls for reduced government waste, a simplified tax code, deregulation to spur entrepreneurship, and a renewed focus on Canadian energy and manufacturing to rebuild economic sovereignty. His vision resonates with those who believe that Canada's economic malaise is not just a result of external shocks, but the product of deliberate policy choices that prioritized short-term political gain over long-term national interest. Compounding the situation is the troubling state of Canada's monetary defenses. Unlike other advanced economies, Canada lacks substantial gold reserves, once considered a standard form of financial insurance. This absence limits the Bank of Canada's ability to reassure investors and backstop the financial system in the event of a major crisis. As inflation continues to outpace wages, and with limited tools left in its arsenal, the bank faces a stark dilemma: raise rates further and risk triggering a wave of bankruptcies and foreclosures, or print more money to purchase debt, fueling even more inflation and potentially devaluing the Canadian dollar. The labor market offers little relief. Canada's unemployment rate has climbed to 6.9%, the highest since 2016 outside of pandemic-induced disruptions. The jobs that are being added tend to be temporary, part-time, or low-paying, hardly enough to support a household in today's economy. The once reliable middle-class path of work, homeownership, and modest savings now seems like a relic of the past for a growing number of Canadians. As the country teeters on the edge of a full-blown economic crisis, the political stakes have never been higher. The next federal election will be a referendum on more than just party platforms. It will be a choice between competing economic philosophies, leadership styles, and visions for Canada's future. Mark Carney's Liberals must defend their record and articulate a credible plan for recovery. Pierre Poilievre's Conservatives must prove that their solutions are not just critiques, but actionable strategies grounded in reality. The rumored grief counseling at the CBC, regardless of its veracity, captures something raw and real about this moment in Canadian history. It points to a country that is not just economically vulnerable, but emotionally fatigued. The cost of living isn't just measured in dollars, it's measured in sleepless nights, strained relationships, and shattered dreams. Economic policy, in this context, isn't an abstract debate, it's a matter of national well-being. To avoid the worst, Canada will need more than soundbites and slogans. It will need collaboration between federal and provincial governments, between public and private sectors, and between political opponents willing to put country over party. Structural reforms, investment in productivity, a renewed focus on energy independence, and a serious strategy for monetary resilience must all be on the table. This will also require addressing the psychological dimensions of the crisis, offering hope, rebuilding trust, and demonstrating that leadership is not just about managing decline, but about charting a path to renewal. The path forward will be difficult, but not impossible. Canada still has the resources, talent, and institutional capacity to turn the tide. What it lacks, at this critical juncture, is leadership with the courage to act decisively and the vision to lead the country through uncertainty.